Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hi, everybody. Greg Palmer welcoming you to the Finovate podcast. Joining me today, we have Matt Ober, managing partner at Social Leverage. Matt, thanks so much for taking the time to connect with me today.
Yeah, thanks for having me.
So as you can probably tell from the title, we're going to be talking about venture capital at a high level in the fintech space. But Matt, before we get there, can you start us off with just a quick introduction of yourself and what Social Leverage is all about?
Yeah, so I've been a partner here for a little over 4 years. Social Leverage, we've been around for almost 17 years. We're a seed stage venture capital firm focused on fintech and vertical AI. Probably most well known for being first investors in Robinhood, eToro, Alpaca, customer with a K. We just closed our fifth fund, which is an $85 million fund to continue to invest in early stage companies. And I spend most of my time focused on the financial services space and investing in really early stage companies.
Yeah, well, congratulations on the fund close. That's always a big deal. I'm sure you have your hands full now with trying to get everything going for that one. But I'd like to start by just talking at a really high level about what you're seeing on the investment side of the industry. How is 2026 looking? Any predictions for what we can expect to see this year?
I would say 2026 is continuing to be as busy as last year. I was joking with some friends that the summer last year was the busiest we've seen in years, and I think it's only continuing. I think a lot of money flowing into the private markets. I think there's the money that goes into AI, and then there's everything else. And so for us at the early stage, it's a great time. I think there's obviously a real bifurcation of companies raising tons of money at insane valuations that we read about in the news and see on TV. And then I think there's everything else. But we're excited. I think fintech is an exciting time to be investing in. A lot of changes in regulation and a lot of just new technology that's making things that weren't possible now.
Yeah, no, and I'm glad to hear that you're seeing and kind of predicting continued levels of investment. I think from my standpoint, it feels like the investment funding going into fintech is always on sort of a pendulum swing. Like it sort of goes back and forth, where on the one hand, it's maybe too much money going in, company valuations getting a little bit too high. And then on the other end of the spectrum, maybe where we were in kind of 2020 or so, maybe the pendulum swings too far the other way and there's funding is too difficult to get. And there's companies who should be getting funded who are having a really hard time. Where do you see us now on that kind of pendulum swing? Are we at a moment where we're kind of right about where we should be, right in the balance? Or is it drifting now kind of into that, maybe overinflated side of it and potentially some company valuations getting too high and almost a little too much money flowing into the space?
I think it kind of depends. I think it's a mix, right? I think financial services is blending a lot, right? We have tons of money flowing into AI. If your AI story is tied to fintech and it's believable, maybe there's too much money coming in. I think prediction markets are a hot space. And so prediction markets becoming fintech, or is it really gambling? Like there's a lot of money chasing the poly markets and Kalshi type valuations that we've seen. But on the other end, I think that there's people building really interesting things in fintech, whether it's in wealth management or in capital markets that, there's money there, but they've got to have a real business and a real idea. And I still think we're seeing the valuations that get us excited. And I don't think we're seeing, the craziness we maybe saw back in 2021.
Yeah. Things did get a little bit out of hand there for a minute. So, obviously AI is the hot topic, and it's certainly from an investment standpoint, I would imagine that virtually all of the companies that you're looking at have AI involved in at least some way. What are you seeing right now as the biggest opportunities for companies who are kind of using that AI in a creative way or in a way that's going to drive real value? Is there any particular type of company that you think looks really attractive to you at the moment?
I think the most exciting uses of AI are like under the hood. I think AI is becoming more like cloud technology, where it's allowing people to rethink how do you build a company with AI from the ground up. So it doesn't have to be these chat bots or recording our Zoom meetings and giving us a transcript. I think it's how do we do something that used to take us thousands of people, and can we do that with 10 people? And so like deploying these AI agents to collect data and clean it and organize it and then deliver it and give us the same capabilities that we maybe were buying from the big incumbents for hundreds of thousands, if not millions of dollars a year. And can we democratize that and make that easier? So that's what really excites us. I think it's also rethinking I think about like a lot of the tools on the investing side where, analysts used to spend weeks doing diligence and getting up to speed on companies and building pitch decks. And can all of that go away now, or 90% of that? And now we're really spending the time on more creative thinking and more in-person meetings to make intelligent decisions that is supported by these AI and AI agents, I think is the big opportunity.
Yeah, well, you bring up a really interesting one there. Talking about kind of the work that a lot of analysts would do, especially in the investment space, looking at who represents a strong potential investment. How much do you trust AI at this point, as it currently stands, to be able to do that type of work really well? I mean, I feel like and again, if you look at the media, there's always high profile cases of, AI telling people to do absurd things or answering fundamental questions in an incorrect way. And so that sometimes creates this little bit of hesitancy in people's minds. Can we actually trust this? What's your read? Do you feel like AI is at a point right now where we can trust it to do some of those things?
Listen, I think it's trust but verify. I think the best AI applications have some sort of click-through transparency on where the data is coming from and the source of the information. I also think that AI gets better and better with how you feed it information, or, if you're prompting it, how you prompt it, right? Giving it background and insight into what you're really after. So I think that things are moving so quickly that by the time this podcast ends, we might see a new model being released from Google or OpenAI or Anthropic, right? So we're seeing it improve. I think the quality of the AI is based off of the access to data that it has. And the longer it has access to information, the better it gets. So I'm a believer. I've seen things change dramatically over the last year, and I think it's only going to get more impressive.
Yeah, well, certainly it's getting better all the time. And I think one of the other important factors that doesn't get talked about enough is, when AI makes a mistake, you have a lot of high profile people talking about it, saying, oh, look, it's imperfect. But human beings are imperfect as well. It's replacing something which is already imperfect. And so this is, I think, one of those kind of reality checks that sometimes we need to think about too. Humans are certainly capable of making mistakes. They're certainly capable of missing critical details. And in any system, there's going to be kind of built-in backup, built-in redundancy that's designed to kind of catch and double check if somebody else does make a mistake. And I think those types of systems are a really critical component as well. And we're seeing a lot of that on the Finovate stage, people who are looking at not only how do I use AI intelligently, but how do I create a system by which we can kind of verify what it's spitting out. So we don't have to necessarily take it at face value. Whatever this black box spits out, we have a way of kind of thinking critically and say, okay, wait a minute, hold on. Does this seem right? That auditability side of it, I think, is really critical as well.
I completely agree.
I'd like to switch gears and talk about kind of the founder side of it. Obviously, you work with a lot of founders. I'm sure you get a lot of people reaching out to you to try and get your attention and obviously encourage you to invest with them. What advice do you have for fintech innovators who are looking to stand out in what is a really crowded AI space? Obviously, it's very difficult sometimes to differentiate yourself. So what advice do you have for companies who are looking to kind of get the attention of somebody like yourself?
The number one thing is like you can cold email and cold LinkedIn, but a warm introduction is worth 100x more than anything, right? Like if I get an introduction from a founder that I've invested in or a founder that I respect that we just maybe didn't invest in, but I'm connected with, that's worth a lot more than it coming through a cold email. Or if it comes through another VC or an investor of ours, those are what we, 99% of the time are going to end up investing in. So I think that's like number one, like spend time trying to get to that point versus just cold emailing and blasting people. I think as investors, we get hundreds of these cold emails and it's hard to really get through all of them or even give them the benefit of the doubt. I think also targeting the investors that are actually the right fit. So like spending some time, like why would you want their money? Have they done something in their past or have the experience that can be helpful? Because not everybody needs venture money or should be raising money from a VC. And also like just because we did a healthcare software company, because we do some vertical AI, vertical SaaS stuff, doesn't mean we're a life sciences healthcare investor. So I think it's spend the time to understand who you're asking for money from. It's no different than dating. Like think about who you're swiping right on.
Yeah. Well, and I think to take the analogy potentially to the point that where it breaks, I think, again, the warm introduction is really helpful. You can find out a lot in an online profile, but having a friend come up and say, hey, you should talk to this person, they'll tend to just kickstart things a little bit. So to just kind of summarize, the importance of networking is obviously really critical, right? Finding people who you can not necessarily do business with, but who are allies who can kind of put in that friendly word for you, who take the time to understand what you're doing and potentially even offer critical feedback. These are obviously really important things. I'd like to approach a question from the other side now as well. What are some of the biggest mistakes that you see companies make, or the things that kind of just chip away at your trust or your willingness to work with them?
I think mistakes are raising money from the wrong investors, not thinking through the cap table and the structure. Like I think in the early days, like raising a bunch of safe notes and not understanding what that means, raising money from people that aren't truly helpful in those early days. I also think just how the team is constructed. If you have too many co-founders, I think that you're setting yourself up for a potential headache. You have 3, 4, 5 co-founders and you guys are all equal. Life happens. And so do you really think that over the next 10 years, you're all going to be on the same page? And how are you going to deal with that? I think those are quick, common mistakes. And I think it really comes down to who your investors are, or is almost as important as who your co-founders are. Especially at the early stage, most companies take 7 to 10 years, right? Robinhood took 9 years to go public. eToro took 13. Most seed investors, it's a 10-year fund. So they're looking at this as a long-term relationship. And so they want to know that the founders know what they're signing up for.
This is a really interesting one because I think this is something which goes beyond sort of what does the technology do. You talk about this human side of it, and it's not difficult to imagine a situation in which a company's founding team, for whatever reason, finds themselves in a situation of disagreement. How do you kind of reconcile that? I mean, if something like that does happen, is there recourse for someone like yourself or advice that you give, or do you just kind of have to sit back and hope they can sort it out themselves?
Listen, I think there's founders that break up and they're in agreement and they go their separate ways. I think there's messy breakups. I think there's a whole host of things that happen over time. And sometimes it's not messy. It's just life changes, right? People get married, they have kids, they move out of the country, they have different ambitions. So I think we've seen it all. I think one of the values of a firm like ours being around 17 years and, having invested in over 100 companies and a whole lot more outside of the fund, just personally, I think we've all seen a lot of things, the good, the bad, and the ugly. And so having the right people you can lean on to think through those things, but also address them and think through those things at the very beginning. Structure the company with your first investor the right way and think through, are you guys equal co-founders? Should this be set up differently? How much equity are you giving to your early employees? Just best practices, I think, are really important for those companies that want to minimize potential headaches down the road.
Yeah. And again, this is something which, at least from my standpoint, I don't hear people talking about a lot, right? When people talk about founding a company, they talk about MVP, they talk about, business model, they talk about things like this. And this side of it is so important to focus on because there's so many ways. I kind of think about building a fintech company as walking along a narrow path that gets progressively more and more narrow as you go along it. There's so many ways you can fall off the path for so many reasons, some of them business reasons, some of them not. And, sometimes it can be the dumbest stuff that can end up crippling a otherwise really successful looking company. So I think that's a really important one for anybody listening to think about, especially if you're on that early side of the innovation game. I do want to just take a moment here before we come to the close. We've moved Finovate Spring to San Diego. You're a San Diego local. I wanted to give you an opportunity. You want to plug the city at all? Is there anything people should know about coming to San Diego in May for a conference like Finovate Spring?
Listen, San Diego is a great place to come for a conference. Obviously, the beaches and the food and the people are great. I moved here from New York. I think you have, not only that, you have a lot of great opportunity for these fintech companies to partner with a lot of businesses here. We have huge wealth managers, some of the largest mortgage brokers in the country. You have venture firms here. So I see a lot of founders come through town for business. So I think there's a lot of opportunity to build a lot of meetings around the conference, days before and after. Being downtown, you have the opportunity to go to Coronado, see the island. So it's fantastic. Tie a trip to Mexico for vacation on the back end of it. You won't be disappointed.
Yeah. I will say last year I did see several people who I know are at the conference with their golf clubs in the elevator as I was leaving for the airport myself. So a lot of ways that you can.
A lot of good golf, a lot of good surfing.
Yeah, cool. We've got Finovate Spring, May 5th through 7th, coming up at beginning of May. So we're about at the end of time here, and I always like to end with just a high-level prediction. What are you seeing? What do you think the fintech ecosystem will look like as you look kind of like 5+ years down the road? This AI wave potentially crests and starts to recede, and sort of what replaces it? What do you think is the future of financial services that far out?
I think we're seeing a lot of changes in regulation. And I think AI and technology is making us rethink what's possible in financial services. I think prediction markets are becoming a new asset class. I think predictions and gambling and just what is investing is changing. It's all blending together. You see this with Interactive Brokers and Robinhood and Schwab's comments. And so I think we will see that all come together, and a lot more quote unquote super apps in financial services where I can gamble, invest, predict, do my banking all in one place. I'm not a crypto guy, but I think that tokenization is changing what is investable from private companies to public companies. And, from an infrastructure perspective, how quickly those things settle and move. And so I think it will be easier for both retail and institutions and wealth managers to allocate money to private and public markets and find liquidity quicker. And I think with all of that, we're an investor in Alpaca, which is really like an infrastructure for building the Robinhoods globally. And I think one thing I see from that is the rise of investment globally from like new brokerages opening up in India and the Middle East and Turkey. I think the ability to invest globally, like people outside the US invest in US markets, I think we'll be able to wake up in a few years and make investments in the Middle East and the UK. And it won't be just through ADRs and GDRs. I think it'll be easy and simple. We'll have access to more information and there won't be these huge costs involved. So I think all that is exciting from the investor seat, but also from an end user's perspective.
Yeah, no, I think that's excellent. And so much of what you're talking about here seems like it's going to come true, especially given the forces that we're seeing at play right now. Will this be ultimately to the benefit of investors and their bottom line? We'll see, right? There's a lot of different places where when you start talking about gambling and as an asset class, you're obviously talking about risk, but at the same time, there's always been an element of risk. And so how different is this? And other than just giving people more options, we'll have to see. Really interesting predictions. Thank you, Matt, for taking the time to connect, and good luck with the new fund that you just launched. I'm sure we'll see you down there in San Diego for Finovate Spring. But in the meantime, thanks again for taking the time.
Thank you for having me.
Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.